What if I told you the US government could eliminate income taxes entirely?
No more money taken out of your paycheck.
No more IRS breathing down your neck. Sounds amazing, right? Well, Donald Trump says he has a plan to make that a reality. And it all comes down to tariffs. But here's the real question. Does this actually work? Or is it just political fantasy? By the end of this video, you'll see exactly how Trump's plan stacks up, what it means for your wallet, and whether it's even possible. Spoiler alert, the numbers might shock you. Let's get into it. Trump has floated a bold idea, using tariffs as a way to replace income taxes for Americans. He claims he's serious about it. But before we dive into the numbers, let's break down what tariffs actually are and how they impact everyday Americans. Tariffs are essentially taxes on imported goods. When the US places a tariff on a product, foreign companies pay that tax when they sell their goods in America. But here's the catch. Those costs usually get passed down to you, the consumer, in the form of higher prices. So can tariffs really generate enough revenue to eliminate income taxes? And if they can, what would that do to the economy? Let's break it down. Trump has floated some big numbers when it comes to tariffs. Here's what he's proposing. 1. A 10-20% tariff on all imported goods. 2. A 60-100% tariff on goods from China. 3. A 25% tariff on imports from Canada and Mexico if they don't cooperate with his immigration policies. That sounds like a lot of money, right? But let's compare it to the revenue the US government actually needs. Right now, tariffs, customs duties make up only 2.23% of total US government revenue. Meanwhile, individual income taxes make up nearly half. So if we wanted to replace all income tax revenue with tariffs, economists estimate that the US would need a blanket 78.5% tariff on all imports. Yeah, that's not exactly 10-20%. That's massive. And there's another problem. When you tax something, people tend to buy less of it. That's called elastic demand. If prices rise too much, people start looking for alternatives. If the US slaps a 70% plus tariff on imports, businesses will likely start importing less to avoid the cost. That means the tax base, the total amount of goods being taxed, would shrink. And if imports shrink, then the government collects less money in tariffs. So even if the plan looks good on paper, the reality is that a super high tariff could actually reduce revenue instead of increasing it. But that's not the only problem. Let's say Trump's plan goes into effect and tariffs start replacing income taxes. What does that look like for you? Here's the issue. When tariffs go up, prices on everything start rising, not just imported goods. Why? Because domestic producers will raise their prices too. If foreign goods get slapped with a 50% tariff, domestic companies don't have to keep their prices low anymore. They can just increase their prices slightly below the tariffed imports and still sell more. So instead of paying income taxes, you'd just be paying more every time you go shopping. And here's where it gets even worse. Right now, about 98% of all federal income taxes are paid by the top 50% of earners. That means the wealthiest Americans shoulder most of the tax burden. But if we switch to a tariff-based system, the burden shifts. Lower and middle-income Americans spend a much larger percentage of their money on goods and services. If everything becomes more expensive, it's those families who will feel the squeeze the most. So instead of targeting the rich, tariffs hit everyone, especially the working class. And there's another problem no one's talking about. Under Trump's first term, corporate tax rates were slashed from 35% to 21%, one of the biggest tax cuts for businesses in history. Now he's floated the idea of cutting them even further, possibly to 15% for domestic manufacturers. So let's do the math here. 1. Businesses get lower taxes. 2. Consumers get higher prices from tariffs. See the pattern? The plan, whether intentional or not, could benefit large corporations while shifting the tax burden onto everyday people. And that's if the plan even works, because there's one more major roadblock. If you think foreign companies are just going to sit back and accept these tariffs, think again. There are tons of ways to get around them. 1. Misclassification. Importers falsely label their goods as something else to avoid high tariffs. 2. Undervaluing shipments. Companies report a lower value on their goods to reduce tariff costs. 3. Smuggling and rerouting. Businesses send goods to other countries first to bypass direct tariffs. All of this makes enforcement a nightmare. Even with strict regulations, billions in tariff revenue could be lost through evasion. So at the end of the day, does Trump's plan actually hold up? On the surface, eliminating income taxes sounds like a dream. But when you break down the numbers, the challenges become impossible to ignore. 1. To replace income taxes, we'd need tariffs of 70% or higher, which would crush imports. 2. Prices on everything would skyrocket, hitting lower and middle-income Americans the hardest. 3. Loopholes and evasion could mean the government never even sees the revenue it's counting on. At the end of the day, this idea might sound great on the campaign trail, but in reality, the numbers just don't add up. But what do you think? Could Trump actually pull this off, or is it just another campaign promise that won't happen? Let me know in the comments. And if you found this video interesting, check out this one next. It breaks down the real impact of tariffs on the economy. Thanks for watching, and I'll see you in the next one.